Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's figure out just what in the hell's happened to the stock, what we can expect moving forward. It is a long weekend, don't forget the Monday is closed for MLK Day, so we get a bit of a break, I guess, but yeah, let's just talk about it. Let's figure out. Let's go over. There's lots to go over. So as usual, if you enjoyed, don't forget to hit that like button. This is not financial advice. I'm not a financial advisor. And of course, my membership section on YouTube is live. The link is down below where you get access to my intraday thoughts, updates, etc. And yeah, let's just jump into it. Tesla, once again, no surprise at this point. We're kind of just another day really down almost 4% on the day, which is pretty severe, but nonetheless still closing at about $218 per share, or just above $218 per share. Let me just double check the exact number. Actually 218.89. It's actually down another 0.3% post-market. Fantastic. But nonetheless, let's talk about it. So what does this all mean? First and foremost, let's talk about what is happening overall. Like, let's take a look at the overall picture first, right? Before we go into more, specific detail. We had this massive breakout of this bull flag. We ran up to 265. Maybe look on the weekly even, right? Ran up to 265. Remember, I was talking about this level for quite some time. We were completely right about this. We had a beautiful run up. Obviously, in hindsight, I wish I took some more precautions here. I sold calls, but it wasn't enough. Obviously, some more precautions would have been nice. But nonetheless, we were absolutely right about around this 265-ish level, and that's exactly where we rejected at and set up a pretty bearish-looking hammer candle, inverted, like bearish hammer candle, and of course, follow through. And like I said, I personally expected it, which, again, I did expect to come down to about, this retest of the flag, right? About 240, give or take. What I didn't expect is for this week essentially to be also pretty much just as bad as the last week. I didn't expect us to get this low. I'll be completely honest. I will obviously own up to that entirely. I expected the rejection here. I expected a retest of the flag. Did not expect it to fail. I mean, at least I was very much hoping it wouldn't fail. And especially did not expect us to drop all the way down to 218 this fast, especially this fast without any breaks, right? Taking a look at the daily, again, just a straight drop, right? Pretty much one candle in between of a break. And after that, other than that, just straight just flush down all the way to these levels. So pretty painful stuff, but there's a lot to go over. So first and foremost, let's talk about, let's just do the daily really quickly. The daily, I mean, it's pretty simple, right? There's bad news and there's good news. The bad news is obviously we're still below pretty much every meaningful moving indicator. We're below the 200-day moving average. We're below the 50-day moving average. We're below the 21-day moving, or 21 EMA, and we're below the 100-day moving average as well. Below all of these, right? So that's obviously not ideal. There's a lot of wind, by the way, outside. It's very, very, very windy in Toronto. So hopefully, you guys don't hear that, but yeah, it's that simple. We're just below pretty much every meaningful moving average, right? It is what it is. It's obviously not great. That's obviously bearish, right? That's not ideal. Hopefully we can recapture it next week, but at least one of them, like the 200-day moving average, that would be a phenomenal start. But again, we are below all of them right here, right now. And that's the pretty obvious bad news, right? The other bad news is the fact that, remember this these two green lines in between, ignore, I'll need to change the colors or something like that. But these two green lines right here, remember we were talking about this potential like little channel that we were in, and we were at yesterday's candle at least bouncing supposedly at least off the bottom of the channel. Well, not only do we gap down below on more bad news, by the way, all of this drop right here is just bad news after bad news after bad news after bad news. That's an increase the workers' wage, which obviously is a good thing for the workers, technically bad for the financials, which makes you wonder, why would they do that if their financial for Q4 is bad? Maybe it's actually that good that they had the room to increase workers' wages. Who knows? We'll see. But, we had that. We had the shutdown, or I guess somewhat shutdown in Berlin due to issues overseas with, of course, the war and whatnot, and supplies coming over. So that's going to be putting that factory down for the majority of it for about a week and a half or so. That's bad news as well. Tesla also lowered the prices in China. Not great news as well. So it was just bad news after bad news after bad news after bad news. I do think the stock is completely overreacting personally. I think this is just a momentum shift. You know how like when stocks just really start to rally, they just continue rallying. It almost doesn't even matter what happens. They're just on that move, right? They're just gonna continue rallying. NVIDIA is doing it right now pretty much for the most part, right? Just beautiful rally. Tesla obviously does it as well. Like this is one example. It just kept going, right? It just kept going here, just kept going here, just kept going. This whole rally here pretty much just kept going. Had a break here, but the point is, especially when stocks like Tesla really start doing a move, a very substantial move in a direction, things just snowball. They get faster, more severe, more substantial, and we're pretty much doing the exact thing just to the downside now, right? It's pretty normal stuff. It sucks, it hurts, but we've been through this many, many times. Tesla does this many, many times, and there's a few things interesting to note at. So first and foremost, the reason I brought up this channel is the fact that we gapped below it, we came up, we retested it, thankfully, or I'm thankful for the bears, I guess, successfully. And then obviously you can see pretty much continued our way back down. Not ideal, right? This is where I did exit some of my cash secured puts that I had. I pretty much exited them a little bit of a loss, but thankfully a lot less of a loss than it was if I, waited, for instance. So that's great. So at least I, and then I resold one at the end of the day. And I did buy the dip a little bit as well. But that's not good, right? Because now it's acting as a resistance. Not ideal, right? This whole general area, remember this green box acting as a resistance. Not ideal. However, with that being said, there's something interesting to note. So let's go ahead and zoom out a little bit like this, and let's take a look at the overall picture one more time. So we have, let me remove the moving averages just for now. We'll bring them back up on the weekly time frame here, but let's take a look over here. Do you notice anything interesting? We have, of course, like I said before, the inverted head and shoulders pattern. We have the left shoulder here, we have the head here, and then we have, of course, now the shoulder, the right shoulder being formed right here. Let me just in case, I'll draw it out like this. Boom, right, that's one. Go ahead and clone this. That's two. Go ahead and clone this. And that's three. That's essentially the situation we currently find ourselves in. This is like, in my opinion, the last hope, right? This is the last hope for the bullish pattern for something to give us somewhat of a relief rally. Obviously, if this pattern actually plays out, which would essentially constitute a break of about, in my opinion, at the very least 265, this would play out. And then we would have a phenomenal rally. Maybe this is just the flush before the rally. Maybe that's copium. I don't know. But what I do know is the fact that we're still holding this pattern, this head and shoulders pattern, inverted, which is a bullish pattern. But notice something else that's interesting. The right shoulder is pretty much almost exactly where the left shoulder pretty much quote unquote bottomed out, right? It's maybe a little bit lower, but it's very close to it. But the thing that's the most interesting is the fact that this left shoulder also had a massive flush. Just started off kind of bad, kind of looking shaky, and then it just accelerated aggressively. You can see the slope, it just started sloping down like substantially, right? Almost like a waterfall. Right? Pretty much the same thing happened here, kind of shaky. And then we just kind of started really accelerating this loss, or this selling pressure, especially the last like 3 days or so, right? It just really started to accelerate and it got much more severe. And interestingly enough, we had a gap down here, which was the bottom of the shoulder. I'm not saying this is going to happen again, but it's just interesting to notice these potential patterns, because then we also had today this massive gap down with a candle. Again, it's a red candle compared to, a green or I guess white candle, whatever. But the point is the fact that they both are looking pretty similar, like a spinning top type candle. So this potentially could be, again, like I always say, these stocks, right? Things always often rhyme, right? They're never exactly the absolute, replication of it to the T, but it often rhymes. And so far, we're getting a pretty similar situation over here, where we're getting a very similar gap down, very similar, again, not exactly, but pretty darn close candle on the right potential shoulder, and it's happening at a crucial spot. So this is the idea here, right? So that's good to know. Hopefully that makes a lot of sense. And that's pretty much what I'm looking at right now. But as we move on to the weekly quickly, it's important to understand that we're also at the bottom of this channel, right? We're at the bottom of this channel. So keep in mind, eliminate this bull flag for now. Pretend this little bull flag isn't here. Like, we can pretty much eliminate it for now. Like, it's whatever. It's in my opinion, it became irrelevant, mainly because now what really matters is just this overall massive, I guess, wedge that we are in since all-time highs and since pretty much the 52-week lows, which was $100 per share. This bull flag, honestly, at this point, in my opinion, irrelevant. The main thing to look at is these two massive bars. So we ended up, again, breaking out the bull flag, pretty much coming up to 265, rejecting, and that was essentially the top of this massive wedge. Now, we obviously, since it's getting tight, the distance between the two isn't too substantial. We came right down almost instantly to the bottom now of this massive weekly wedge. This wedge is important. Whichever direction this wedge breaks is going to be most likely a pretty severe continuation in that respective direction. But with that being said, we are at the bottom now of this wedge. So we went from the top of one part to now the bottom of the bottom. So the top of the top to the bottom of the bottom, if that makes sense, right? Because, we got almost to the red part of this top and we got to the red part of this bottom, right? Interestingly enough also is we're pretty much right at the weekly 200 moving average, right? We're pretty much stopping right at it, which also happened to coincide with the bottom of this wedge. So that's all very important information, because this is the spot right now roughly to hold. There is the potential for a little bit more of a flush early next week. There are some puts we'll talk about that are, coming in, but this picture is just important to understand. Whichever direction we break, in my opinion, is going to be pretty severe and most likely a pretty sizable run up or run down, I guess, in that, again, respective direction. So this is the main thing I'm looking at right now. Again, the most important thing here is how the weekly closes, because potentially we can have a little bit of a flush. Maybe we go down a little bit lower. Maybe we go down to like 213 next week, maybe Tuesday even, right? That is technically a possibility, but it matters on how the weekly candle closes. Do we get a weekly candle closure below the 200 moving average on the weekly and below this essentially trend line over here or not? That's the most important part, because it can also be a false breakdown. So that's going to be very crucial to pay attention to on the shorter week next week. Right? So make sure you understand that. That's important. But that's kind of the main picture I'm looking at, right? Otherwise, we're pretty much below every meaningful moving average as well on the weekly now, unfortunately, which is a little disappointing to say, but it kind of is what it is, right? The only one that's holding us now is the 200-day or 200 moving average on the weekly. So that's, that's important to understand. Let me go ahead and remove all these ones again. Now, the next thing that's important to understand as we hop back to the daily one more time is going to be, remove this, is going to be the indicators, right? The indicators. So let's talk about the indicators. There's a few to talk about, and let's bring them up all right here, right now. So first and foremost, we have the RSI. RSI, as you can see, as I zoom out, obviously oversold, right? Every time we've entered this rough oversold territory, maybe a little bit lower, but generally in this general like oversold territory, every single time we have bounced. Obviously, the question is, how low do we go? Not necessarily, if we'll bounce. It's just a matter of when. Right? And do we go a little bit lower? That's the only question here that remains. But every time we've breached this pretty much 30-ish level on the RSI, it has bounced every single time. Every single time this has happened, and every single time we went down and breached this oversold territory, every single time it felt like there is no bounce. It felt like Tesla's going down to $100 per share, $50 per share. People were screaming. The bears are excited, rightfully so, don't get me wrong. But the sentiment is atrocious. And right now the sentiment is atrocious. People are bashing Elon. This happens every single time this happens. The same thing is just replayed. When Tesla's rocketing, everyone loves Elon. They don't give a flying F what he's saying on Twitter, X, whatever. They don't care. They're making money. No one cares. Now that we're losing money, or at least, not everyone, but of course, but some people are losing money. I am obviously part of that right now. A lot of traders I'm following are either already taking the losses, pretty substantial losses as well, and or are holding their losses. I'm personally just holding my losses. I did, of course, hedge a little bit, obviously not enough to offset, but I'm also buying the dip. But the point I'm trying to make is the fact that people are just going to have this really negative sentiment on such drops, especially such severe and consecutive drops. But like I said, every time the RSI enters oversold territory, it has bounced every single time. Every single time. Literally every time. That's just how it works. Things don't only go up forever. Things don't only go down forever. So that's number one. Number two, we have, of course, the squeeze indicator. The squeeze indicator, obviously, like I said many times, was holding red for quite some time, right? The move to the upside clearly didn't trigger the squeeze, but this move to the downside did trigger the squeeze, and now we're following through, and this is pretty much the payment that we get, right? It's now following through in the squeeze. But with that being said, as we jump over to the weekly very quickly, the weekly has not triggered the squeeze whatsoever. We are still sitting on red circles. Once this triggers, expect the same kind of move, but on a weekly time frame. And you know what that means? It's going to be probably a lot more severe in whichever direction it decides to go. Hopefully not down. I will have to unfortunately probably cut losses, pretty painful losses that I would prefer not to, if it, of course, triggers to the downside. And if we start losing this overall wedge, I would probably be unhappy to see that. But that's the kind of thing I'm looking at, then very closely paying attention to. So we did trigger that, and it is clearly playing out. I think there's no arguing that. And then we have the stochastic. Same idea as the RSI. Very similar idea here, right? Every single time the stochastic has entered these extreme bottom levels, like right now we're sitting at like -80, right? Hopefully, can I see? Let me make sure I'm not blocking anything. I'm not. So as I mouse over here, this is roughly where we are right now. Every single time we have entered anywhere near this, we have bounced as well. Every single time. Same with the RSI. Again, it's not a matter of if, it's just a matter of when. Yeah, maybe we do go a little bit lower. Yeah, maybe we do have a bit of a flush on Tuesday, let's say. Yeah, maybe we do go below the trend line temporarily, and then it just ends up being a false breakdown, similar to the false breakouts we had of the bull flag, and then we just went right back in it. Absolutely can happen. But again, every single time it has bounced, and it's just, don't have to take my word for it. It's literally right here in front of your eyes, right? So just take that into account. Again, just my opinion. Could be wrong entirely, but I'm just saying what I'm seeing. Whether it's right, whether it's wrong, who knows? The market will always have surprises for both parties, the bears, the bulls, and even the people that trade in between. It will surprise everyone, and it'll humble every single person. Yeah. Now, moving over to the options very, very quickly. One thing to note here that's interesting is, so this one just came in. This one wasn't here before. Now we have a 2.1 million 220 put expiring 19th of January. So most likely expecting probably one more flush on Monday or Tuesday. But we have a lot of essentially bearishness coming in for next week. We have a bit of bullishness coming in here. We have a 19th of January 1 million put call. But again, we have this fresh 2.1 million put coming in. And of course, we have a lot of smaller ones in between that as well. Pretty much all for next week. Very, very heavy flow of puts into next week. So I honestly wouldn't be surprised if we do get one more flush, maybe one bear trap, and I think from there we can finally look for the bottom and then look for a bounce into earnings. Because also one thing I noted that I was looking at myself is the fact that if we open up earnings over here, not every single time, but more often than not, Tesla has ran into earnings. It has ran up into earnings. It rarely crashes into earnings. It usually crashes after earnings, if anything. But pretty often, if you look at it yourself, it usually runs up into earnings about a week-ish prior to earnings. So next week, Wednesday, will be that 1 week prior to earnings, which is where maybe roughly is where we can start up at least some form of relief rally, because Tesla, like I said many times, is just flat out oversold. It is just straight up oversold. It is what it is. I don't care if you're saying here and thinking it'll go to $100 per share. All the indicators are saying we are oversold. A relief rally is due sometime next week, at least in my opinion. Obviously, the market might have other plans, but that's kind of the main stuff that I'm looking at right now. It's pretty spooky. Obviously, this is a very, very severe area we are in. If you're wondering what I am personally doing, I am still holding my shares. Obviously, I'm down on them, but I am still buying this dip, just nibbling right now. I'm not going too crazy, mainly because I don't have that much more ammo left, honestly. But I did also sell a cash secured put pretty much in the last 5 minutes of the day, and I also sold calls against my shares. Obviously making next to nothing on those calls because they're only weeklies, and after selling calls in such red days, you're not going to get a whole lot of premium, but at least it's better than literally zero. But yeah, that's kind of what I'm doing. But I am expecting a bounce relatively soon because this is just getting ridiculous. We are approaching very crucial levels and we are extremely oversold. And yeah, so pretty much maybe one more tiny flush on Tuesday, and then I expect us to find the bottom and look for some relief rally pretty much as we run up into earnings. And then from there, of course, it's anyone's game and we'll see what happens there. But all in all, thank you so much for watching. If you enjoyed, of course, don't forget to hit that like button. Pretty long video today, but pretty substantial price action happening, pretty horrendous price action. It is what it is. Sometimes the market just likes to do these kind of things, and you have to just either accept it or, maybe it's just, if you can't handle it, can't handle the heat, got to get out of the kitchen. That's all it is. That's just how it works. But all in all, thanks for watching. And as usual, if you enjoyed the video, don't forget to hit that like button, and I will see you on Tuesday. Have a great long weekend. Peace.